Hey folks, David Frost, LazyGapTrader.com. In this video, we're talking about day trading, but more specifically, we're talking about gap trading. Gap trading is by far the single most consistent and profitable day trading strategy you can find across the markets today. What I do is teach a course that specifically shows traders two gap trading strategies. One is known as the morning gap trades, and the second is known as the gap fill trades. So today, for example, things were relatively slow. We had a couple of morning gap trades on the board, but there wasn't a lot of earnings. There wasn't a lot of stocks moving around. The stock market as a whole was gapping a lot higher today at the open, which takes away some of the opportunity at the open. But that's okay with us because we have two strategies, and just so happens that on a day when the morning gap trades were few and far between, we had three possible gap fill trades at our disposal this morning. So we're going to go over the gap fill trades in this video, but before we do, I'll show you the second thing I do, which is provide my gap trades to traders that want them each and every day at 9 o'clock a.m. Eastern Standard Time, 30 minutes before the market opens for trading. And here are the three morning gap trades we had possible today, but none of them worked out. None of these three stocks hit their levels. We're looking for specific price levels where we would expect a price reaction in the other direction. If the stocks don't hit their levels, we don't want the trades. They don't exist. They're no trades. But also, I give a list of about 30 gap fill trading opportunities each and every morning, and just so happens that we had three stocks that filled their gap today off this list. These are stocks that had a prior gap higher or gap lower at an opening bell at some point in the past. I track them. I teach you how to track them in my course, and then I also teach you how to trade them. So here's the list I'm tracking for my traders that get my list each and every day. And we had Dick's Sporting Goods, Carmax, and Goldman Sachs filled their gaps this morning. So we'll take a look at those three stocks and discuss exactly what happened on each of the trades. You'll notice on this list, the middle column is the gap fill level. That's at the point in which a stock is expected to have a price reaction in the other direction. That's an important level on the charts. In the next column over to the right, I'm specifying whether it's a long or a short trade. And then on the last column to the right, we're specifying how far away these stocks are to filling their gaps before the opening bell for that day. The first one we'll take a look at is Carmax, and the gap fill level off the list from this morning was $59.22. And you'll notice that the stock opened up above the gap level. Now in the course, I specifically discuss what to do when this happens and what to expect and why. So traders that have gone through my course knew exactly what to do and what not to do with this stock, and I'm going to leave it alone and we'll move on to the next chart. But before we do, you can see how the 59.22 remained an important level even to the point where I make this video, which is about halfway through the trading session. It's a very important level, and the market will generally respect important levels. In my course, I teach traders how to calculate these important levels. Now, the second one that hit its gap fill level today was Goldman Sachs. Now, A, you never know what you're going to get in the market exactly, and B, you have to take into account, and maybe we can learn something here from a day trading perspective. When the whole stock market is inflating as it is today, and the financial sector especially is up even more so than the overall stock market, that's relative strength. So the financials have relative strength even to the rest of the stock market, which is up big today. So when you see something like that, you want to be careful on the short side anyway. And here we have a financial stock in Goldman Sachs that has relative strength in relation to the rest of the market. However, you can see what happened, $223.90. It did have resistance at that point. It did have some kind of a pullback, about 75 cents at the most, before it continued sideways and is now pushing higher. But at the very least, you can see the importance of these levels that I teach traders how to calculate, where we're expecting and normally do get a price reaction in the other direction at these price points. Now, the third on the list today was Dick's Sporting Goods, and you never know what you're going to get, and you never know which stock is going to give you the primo trade. And this morning, it was Dick's Sporting Goods that offered the primo trade. The gap level is the purple line on top, which happens to be at $52.28. As you can see, the stock happened to make a high of $52.31, just a few pennies above that level, and immediately pulled back. Within 30 minutes, the stock made a low of $51.43 on a $50 stock in 30 minutes. To give you an 80-cent pullback off the gap fill level is a really tremendous trade from a scalp trading perspective. That's what these are. These are scalp trades and sometimes day trades. Anytime you have a situation like that and you can get a maximum gain of well over 1% on a scalp or a day trade like that, that's a winner chicken dinner. And with gap trading, this is an opportunity to learn a strategy where you can understand how to calculate specific price areas where stocks are expected to have a price reaction in the other direction. That's an opportunity for traders to learn a strategy that you can use for the rest of your trading career. I'm David Frost, LazyGapTrader.com. Thanks for tuning in, traders.